You've just bought your first set of shares or ETFs. It's an exciting milestone, but I want to let you in on something important. The investment journey doesn't stop when you buy. No, that's when the next phase kicks in. It's the crucial task of tracking and managing those shiny new assets. It's like being handed the keys to a car. You don't just park in the garage, admire it, and walk away. You take it out for spins, keep it fueled, and get it serviced regularly. So, what does the investment equivalent of regular maintenance look like? Well, that's what we're going to unpack today. Hi, I'm Tim from Dad Investor, where we talk about everything from first investment to retirement. All right, let's get into what you should be doing after the excitement moment when you start to buy. The tasks that come next are beneficial to your success. While it might seem like extra homework, they're the difference between hoping your money will grow and actually taking control of that growth. And you'll get better and faster at doing them once you start. Here's some of the things I like to do on a regular or irregular basis to keep a pulse on my money invested. And I think they're helpful to incorporate and consider for your own use. Let's start with true performance tracking. Performance isn't just asking, is the price higher than what I bought it for? That's just the tip of the iceberg. You got to factor things in like transaction fees, dividends to get a clearer picture. This is what is known as calculating your true performance, and it's one of the things that you'll want to get the hang of. Like any investment, you start with what you put into it, take out the costs and expenses, add to the growth or income you got, and find out the actual performance. Then there's upcoming dividends. I like to know when dividends are about to be paid, which is like knowing when your next paycheck is coming. With these dividends, you can plan to reinvest them or just use the cash for other uses. Some investments pay monthly, some quarterly, many twice a year, and some even annually. Knowing this means you can plan what to do with that money and when. Ongoing research. Once you've invested, staying on top of market news, company earnings, and industry trends is a thing. I call this research, but it's more about paying attention to things that could impact or change your investments. You don't need to have a subscription to the Financial Review or be a trader or have those business news channels with the tickers going by. But look, if you invest in the CommBank and see a headline about the CEO or something the business is doing, then it's worth paying attention to it. Another example is if an ETF changes its fees. Research like this allows you to make informed decisions, whether that's holding onto a particular stock or considering selling it off. Then you can look at historical performance. Looking at how your investments have performed over time helps you gauge their stability and potential future growth. You can use the same analysis you did when you first invested to look back again, but include the time you've held that investment to see if it is a trend of performance or if it's comfortable enough for you. This is something you might only do once a year, but it still helps to keep you informed. There's also asset allocation. How are your investments split? Do you have multiple stocks, ETFs, perhaps a bit of real estate in the mix and cash as well? Each of these asset classes carries a different level of risk and reward. For an example, it might be that you have $1,000 a month that you would normally invest into shares, but recently your cash savings took a bit of a hit and the balances dropped. So instead of investing $1,000 each month into shares, you split it 50-50 into shares and filling up your cash pool. This is just the example of how you can use the activity of asset allocation to make moves that are advantageous to your financial situation. On top of asset allocation, there is diversification. This ensures you're not putting all your eggs in one volatile basket. For example, you might own a popular ETF like VAS and VGS at a 50-50 split of your portfolio. So VGS has 3,000 international companies, excluding Australia, while VAS covers the top 300 here on the ASX. But is that enough diversification for you? Has there been recent volatility that has made you uncomfortable? Maybe adding a new, different ETF, which has more companies or a more diverse range of companies, might add better diversification for you, adding to your comfort levels with what you're investing in. Then there's rebalancing. Asset values change over time, affecting the balance of your portfolio. Rebalancing is the periodic adjustment you make to bring everything in line with your investment goals. You might have gone with the idea of 50% VGS, 50% VAS, but over the years that split might change due to growth. VGS might have grown stronger, and now it's owning 60% of your portfolio, leaving VAS with 40%. So what do? Do you buy more of VAS so it gets back up to the 50% of your portfolio, or do you sell down VGS so it reduces its proportion there? I don't have an answer on that scenario for you here, but they are some questions you might want to consider if you're in that spot. We're still on the maintenance list, and let's not forget about tax planning or tax reduction. Investments aren't just about making money, they're also about keeping as much of it as possible when tax season comes around. Understanding which investments are tax efficient is a smart move. There's CGT, reportable income, deductible costs. This isn't a video about tax, but they are all considerations a good accountant will help if things seem complicated. That is my laundry list, or really my list of maintenance things that I need to do with my portfolio on a semi-regular, infrequent, regular basis. I now want to talk about the tools that I use and the platforms that help me do all these maintenance steps in a really efficient way. Before I get into them though, I'd really like to take a moment to say, if you could like and subscribe this video, that'd be fantastic, because it gives me a reason to keep going. It gives me more motivation that what I'm talking about and the topics that I'm talking about are really valuable to you, and I'd love to do more. So if you can support me by doing that, that would be fantastic. Let's move on. So how do we manage our portfolio? I've just presented you with a massive list of things to do. Don't be overwhelmed. There's a couple of tools and platforms that you can use to actually make it a lot easier for you to understand this process and be a real investor, in that you have ownership and awareness of what you're investing in and how it's tracking. The first way to do this, and the more manual way to do this, is through the use of a spreadsheet. Good old Excel or Google Sheets can be set up to do a lot of the tracking that we've already talked about. If you've already started investing, you know spreadsheets are like the pocket knife of personal finance. They're versatile, everyone uses them. You can absolutely set up a spreadsheet to track your true performance, upcoming dividends, even do some asset calculations, especially these days with ways you can bring in outside data such as stock prices to add to formulas and complete your cells to semi-automate the process. One really good spreadsheet that I find is good enough to do the job for investment tracking is the free stock tracking spreadsheet for Google Sheets. I've used it previously and find it a really good way to set up a portfolio tracker through Google Sheets. Though with spreadsheets, unless you're a whiz at them, some of these tasks can seem pretty complex and time consuming. And that's why I personally don't use a spreadsheet to track my investment portfolio anymore. I'll show you what I do in a moment. While they're free and easy, spreadsheets do require regular updating, cross-referencing, and plenty of manual inputs. Now, the alternative to using a simple spreadsheet is using an automated option or a platform that tracks your investments in an automated way. These tools are designed to simplify and speed up the process, giving you more time to do what you actually enjoy, unless you enjoy tracking things on a spreadsheet. These type of platforms give you all the data, analysis, and insights without spending hours keying in numbers and double-checking formulas. For me, over the last few years, I've been using Sharesight. It's a portfolio tracking tool that essentially automates all the tasks that I've talked about earlier. Sharesight tracks not only the growth of my investments, but also incorporates dividends and transaction fees. It gives me a crystal clear view of my true performance. One of my favorite features is the future income tool. It shows up all my upcoming dividends, so I always know when the next payday is coming. While I still do independent research, Sharesight helps me keep tabs on market trends and news relating of my specific holdings. Also, I can see how my assets have performed over specific periods, which helps me inform me on future investment decisions. And the tool provides a visual breakdown, this fantastic reporting of my asset allocation, making it easy to see where I might need more diversification or rebalancing. And then there's the tax reporting. It has some fantastic built-in features for me to easily see my tax liabilities, CGT results, and how rebalancing would impact them. Plenty there I've rolled off, but it's also nice to have features that just make things easier, like connecting to your broker so it adds your trades the moment after you do them. Automating these tasks doesn't mean I'm hands-off with my investments. It means I can be more hands-on with my strategy, research, and fine-tuning my portfolio. Over the years, Sharesight has essentially become my personal investing assistant to handle the routine of trading and buying and selling stocks, which frees me to focus on the game plan. I literally just log in and get up-to-the-minute information on my entire portfolio and how it all fits together, including property, including cash, and every different single share that I own, irrespective of which broker I used. It sped up the process for me, so I'm no longer managing sales in a spreadsheet or chasing news and updates from companies, but just getting an all-in-one touch point of what's going on. If you're thinking of getting started, Sharesight has a really good free version, which you can upload up to 10 of your holdings within it to manage. These could be stocks, shares, ETFs, cash, properties, things like that. There's also some fantastic paid options as well if you outgrow the free plan. And through the link in my description, you can get 4 months for free on any premium plan, even if you start with a free account. At the end of the day, a key task of investing is the management. Investing doesn't end when you click buy. That's just the opening act. The real work, or let's call it the real art, happens to be the day-to-day management of those investments. The beauty is you've got the options on how to go about it. A spreadsheet is like a blank canvas ready for you to color in all the details. But if you don't want to spend the energy on that and just want to think about the big picture, like strategy, research, and so forth, then automating those tasks can be a real lifesaver. Personally, I found my groove using Sharesight, but whatever method you choose, the key takeaway is this: managing your investments is really a non-negotiable. It's not the flashy part of investing, but it's the one that ensures you're not just throwing away your money into a wishing well and hoping for the best. So take the driver's seat in managing your investments. Whether you want to be a spreadsheet aficionado or looking for a tool that simplifies investing for you, just make sure you're actively involved. Because when it comes to making the money work for you, management isn't just half the battle, it's nearly the whole game. It'd be great to hear what you use to track your investment portfolio, whether it's spreadsheet, Sharesight, or something that I've never heard of. Would love to know. Leave a comment below. Like and subscribe if you haven't. I really appreciate your time, and all the best.